Hey everybody, it's James here with Crypto Common Sense, aka Three Peaks Trading. It is November the 2nd, 2025, and I wanted to sit down and do a market update talking about Bitcoin. But more importantly, I want to teach you about some frameworks that you can use in your investing and in your trading that I think will drastically improve your stress levels and hopefully your performance. So I do want to speak my piece on something, and I'm not going to harp on it, but listen, you got to be very careful about the people you're listening to in any space, but especially in the trading and cryptocurrency space, because in most spaces, it is the one-eyed man who is king. But in cryptocurrency, it's worse than that because it's actually the blind leading the blind. And just yesterday, I saw an article from a supposed guru, somebody with a very large following. And in that article, it was essentially saying that Bitcoin was currently in redistribution and that was a bullish development. So I'm going to quickly explain why that's a problem. And I'm going to talk about this chart, and then I'm going to teach you this framework. So essentially, when we talk about distribution and accumulation, those are concepts often associated with Wyckoff theory, which was put forth by Richard Wyckoff about 100 years ago. And the theory is this, that markets go through a markup phase where you have price increasing. Then they go through a distribution phase where the early investors unload on the late investors. And then they go through a markdown phase. And then they start over again with an accumulation phase for the next markup. But during this is like the macro picture. During this, you'll often have consolidation, which, and then uptrend often ends up being reaccumulation. And then on the way down, you'll have redistribution and you'll keep going down. We see these patterns in charts. Oftentimes they'll look like flags. So like this would be reaccumulation, or if you're going down, this would be redistribution. Now, if you have a keen eye, you probably are already seeing a problem with that earlier statement. This person did an article. The theory was put forth that we're in redistribution and that means price should go up. But by the very definition of distribution, price goes down. You don't go into redistribution and then go up. This whole thing was like portrayed as like this bullish thing. And it's really frustrating for me because when you have a big following and when you position yourself as an authority and when you lie about your experience and everything, people tend to default to authority figures. It's in the human wiring. If you look at it from an evolutionary standpoint, if everyone was, a leader, it would be complete chaos and anarchy. So humans, like most animals, we evolved to want to follow authority. Some of us are more authoritative than others, and those people tend to be the leaders, and other people are kind of programmed to follow. And I don't mean that in any way as an insult to anybody. It's just programming. It doesn't mean you can't overcome it. Me personally, I've never been a follower. I've always been a free thinker, and I often do go against the grain, which has served me pretty well in life. It does ruffle feathers, though, which people who follow me probably already know that. Like, I do tend to ruffle some feathers because I speak my mind. So I'm telling you all this because when you see somebody spouting nonsense and when you see somebody confusing definitions of terms, that's a big red flag that you need to be very careful about listening to anything they're saying. I'm not saying that a person has to know all these different terms to be a good trader, because that's not true. A lot of people are great traders and they never bothered to learn the terms because they're self-taught. But those people aren't going on social media and using the terms incorrectly. And this specific person's claiming to be somebody with literally over 3 decades of experience. So the fact that they're calling distribution bullish is very concerning. Just maybe a few hours after that, I saw an article that was like probably AI written, as somebody in my Discord pointed out, but they're talking about how there's this massive rally in crypto and there's $33 billion market cap, over the last X amount of hours. And again, be careful listening to headlines, guys and gals, because $33 billion in market cap, first off, that's not the same as a $33 billion investment. Not even close. Market cap does not equal dollars. That's a myth. And second off, and more importantly, $33 billion in market cap change in a market with roughly $3.72 trillion in market cap total, that's like less than 1%. That's less than normal daily volatility. The market moves up and down more than that in a typical day. So not only was it not a massive rally, it was nothing but noise. So again, be careful. So let's talk about the framework. Obviously, I've been putting forth this idea for quite a while now that I believe we're in distribution, both versus the US dollar when we're talking about Bitcoin, but also when we look at it versus other assets like AI assets, etc. One thing real quickly to talk about, and then we'll get deep into the math side of this, is distribution and reaccumulation in an uptrend look very similar. If you just look at candlesticks, they are both going to be sideways action, sometimes drifting down, sometimes drifting up. They're going to look very similar. The telltale difference, and it's not a guarantee because nothing is guaranteed, but the telltale difference is you need to look at the volume. So when you look at volume, if it's reaccumulation, typically your bigger volume days will be green days. If it's distribution, typically your bigger days will be red days. For example, all the big days were red days. Look at this, these clumps of red, red, red. Whereas the green days, we see much smaller volume, okay? A couple of standout days back here, but this was actually right at the top, which is where you don't want to see those standout days, right? Yeah, it was a little bit before the top, actually. But look, this one was at the top. But you don't want to see those standout days at the top because oftentimes that's signs of a liquidity trap, okay? So that's why I believe this is distribution. But let's talk about math, because the one thing that never lies is math. And I'm very quantitative. I approach trading through a very quantitative approach. And I didn't start that way. I started out emotional like most people. And then I had big highs and I had big lows and I had big days and I had, big red days. And, I had years where I was making, crazy amounts of money and then years where I was losing crazy amounts of money. And what I found out was when you take emotion out of this thing, it becomes much simpler. And so I'm going to go to a different chart real quick. We're going to go to just a fairly blank chart. We'll pull up a blank stock chart here. We're going to talk about a couple different concepts. And this is going to be pure teaching. If you got a pen and paper, you should take notes on this. I'm not kidding. You should literally take notes. If you don't use pen and paper, open a notepad on your computer and take notes. So this is a chart of Netflix. We're going to look at several charts. There's a typical idea. It's not a rule, but it's a typical idea that when a market goes parabolic, and parabolic is basically like a hockey stick pattern, a lot of times you'll see people kind of drawing a curve. And when it starts to go basically straight up, it's parabolic. And those are called parabolas. When they break, the typical rule of thumb is they will retrace and take back 80% of the move. That doesn't mean price goes down 80% from its high. It means it takes back 80% of the move. So we can draw Fibonacci levels to view this. So for example, we'll put a fib down here at the very bottom to the very top. Let's say, for example, this parabola breaks. It hasn't yet broke, by the way. Right now, it's still kind of in this curve. But when it breaks, the idea is it should retrace to the 80% level, which on Netflix is going to be down around $400. It doesn't always happen, but it happens a lot. So let's talk about this on Netflix, and then I'm going to show you how it applies to Bitcoin, and I'm going to show you how it can actually help you time the market, which a lot of people claim is impossible. But guys, if you look at my history, I can prove that wrong. I'm a guy who has no formal education whatsoever outside of high school. And in fact, I dropped out of high school. I went back and graduated late, but I did drop out of high school. And I was a good student. I was a straight A student, but I did see the point in it. And I thought it was bipolar stuff, but it was autistic stuff going on. So I just randomly burned out and dropped out. But I didn't graduate college. I went to college for one semester. I am a self-taught software engineer. I'm a self-taught trader. I'm a self-taught business person. Never any formal training on this stuff. And yet, when you look at all that, somehow in 2017, in December, I was able to predict that the top was in. I lost my conviction, followed the herd, right off the cliff. But I did call it on December 7th, 2017 before I took the video down. In summer of 2018, I said I thought Bitcoin would bottom around $3,200. Now, I'd only been trading for a year, and yet all the big talking heads were saying the bottom was in. It'd been raining sideways around $6,000 for several months, and they were basically like, there's no way it's going lower. And I was like, well, I think it's going to bottom at 3,200, and I think it's going to happen before November of 2018. Well, what actually happened was it bottomed around 3,000, almost exactly where I said, December 18th, about 3 weeks later than what I thought. Dead on. You fast forward to 2019, again, using mathematical models, which is what I'm talking about in this video. In 2019, I said in June that it looked like an echo bubble. It popped in June at 13.8. I said, I think it's going to fall to 3,500 to 4,200. And I think after it bottoms, it will go to 52,000 to 75,000 before 2022. Of course, we all know it dropped, hit 38.58, and then went to 69,000 in November of 2021. So I nailed the bottom, I nailed the top, and I nailed the timeline. You fast forward to the top of that bubble. I said, look, I think it's going to drop to 8 to 12,000, maybe 16,000, but I was leaning heavily toward 12,000. It started falling, and bottomed at 15.5. In the summer of 2024, when it was ranging, I think it was $40,000, $50,000 Bitcoin, I said, look, this is setting up a flag. It looks like it's going for 100,000. And of course, that's what it did. So if a guy like me sitting in a spare bedroom with absolutely no formal education whatsoever can predict and time these markets, so can you. Don't let people lie to you and say it's not predictable. Most of the people that say things like that, they want your money, or they want to be your financial advisor, so you give them a percentage to do what you can already do yourself. So let's talk about this more. So there's Netflix, where we're at right now. Let's look at the last parabola in Netflix. Well, it basically started back here and went like this, right? Draw it on there real quick. And this is already, I can already tell it's going to be long. But again, save the video, take notes. It doesn't change. This same thing has been working for hundreds of years. So there's the parabola. It broke. And look what happened. It bled and bled and bled. And the reason I'm looking at Netflix is it came up inside of my Discord recently. Somebody was talking about it. And I had mentioned that I had bought Netflix in 2022. I bought it. It was either $205 or $210. I bought it like right here. And the reason is because of this concept that I'm teaching you right now. Let's put it on monthly charts. It's easier to see. And we want non-log format. All right, so here's the bottom. This was back in 2012 after a Quickster. They tried to do this Quickster thing and it blew up in their face. Big disaster. The stock cratered. So there you go. Did it get to the 80%? No, the red line's the 80%. So this got front ran a little bit. 146 was the actual level, and it got down to about 165. Very, very close. Now, I bought it at, like I said, 205 or 210 because it looked like it was running out of steam. And also, if you put volume in here, you'll really be able to tell why I decided to front run it. See this massive volume spike in April of that year? See how it was like the biggest volume spike in like years? That to me was a sign of capitulation, where the buyers were giving up hope and just selling their stock. They just wanted out. So to me, that was a sign that the bottom was nearly in. And so I did buy, I think it was right here on April 25th, I bought, right on this very next candlestick. And of course, now it's over $1,000 a share. So this is what I was going off of. Rather than chase this up at these highs up here, I was simply waiting for the parabola to break because it's inevitable. Eventually, parabolas always break. They don't always go to the 80% level, but they do always break. If you look at Netflix further back in history, this is the same thing. It happened back in 2012. Again, they had this thing called Quickster. For those of you that don't know the story, they tried to separate the physical DVD side from like the streaming side, and it really, really went bad for them. Their stock cratered. So look at this, right? This was basically the low. The parabola started, it broke, and retraced past the 80% level. Then we had a period not too long after the dot-com bubble. It was like 3 or 4 years later. Again, parabola busted, stopped right around the 80% level. Okay. Now, again, I'm not using Netflix because I'm cherry picking. It's just a stock that came up in Discord. We can look at this on almost any stock and almost any cryptocurrency, and you will see the same patterns emerge again and again and again. For example, let's look at Bitcoin. So there's the first bubble in Bitcoin, or one of the first bubbles. It's actually not the first one. So this is 2013's tops around $1,000, right? So here's the parabola. Let's start down at the bottom, pull it up. Where does it stop at? Right around that 80% level. Interesting. Next bubble. Gosh, this is so hard to connect these things to. Try to get low right there. There's the high. Runs up, pops in 2017. Where does it retrace to? Right around the 80% Fibonacci level, right? Right there. Now remember, I've been in the space a long time, and back here, people were screaming that Bitcoin was going to $500,000 way back then, and it popped at 20. Then we have this bubble from the low of 2018 to the high in 2021. Where did it retrace to? You got it. The 80% Fibonacci level was at 16,298. Look at that. Tagged it. So if it does that this time, if the top is in, which I'm not saying it is, I do believe it is, but let's say that it does this time, the 80% level is at 37,638. And so you have to ask yourself, do you want to own Bitcoin at 108,000 if it's going to drop to under 40? And here's what people say to me. Well, I don't care because I'm a hodler. I'm a long-term hodler. Most people who say that are lying to themselves, because what they're really doing is they're trying to time the market. If they were truly a long-term investor in Bitcoin and they understood how math worked, they would have less problems selling. Now, you might say, no, that's not true. They're long-term. No, guys, look at the math, okay? I just showed you this, and you're saying, yeah, but what if it doesn't drop? What if the top's not in? Okay, let's say the top is not in. Let's say that I'm wrong. This is not distribution. This is reaccumulation, and that there's one more puke in the market that takes it to $250,000 of Bitcoin, more than double from here, which is extremely unlikely in my opinion, but anything is possible. Let's say that happens. So I'm going to change my fib levels. I'm going to say it tops at 250,000. But guess what? History shows that parabolas always break. Period. No ifs, ands, or buts. They always break. We don't know how far it drops, but they always break. And when they break, the general rule is they pull back 80%. So if Bitcoin tops at 250,000, that means its 80% level is going to be down here around $62,000, which actually lines up nicely with the last market highs. So again, I pose the question to quote unquote hodlers, why would you want to own Bitcoin at $108,000 if there's a high likelihood that you can own it later for under $62,000? You see what I'm getting at here? What they really want to do is they want to try to time the top. That's what most people are trying to do. They want to try to time the perfect top. But that's very, very difficult to do. It's much easier to sell into strength and say, right now it's overvalued. I'm still a believer. I'll buy back when it's undervalued. And this, guys, is the basis of how Warren Buffett became the best investor of all time. He buys companies that he feels are fundamentally strong but are undervalued. He doesn't buy things when they're overvalued. He doesn't chase the market. So you might say, yeah, but what if it doesn't top 250? What if it goes to 500,000 before it breaks, James? I don't know. Let's look at it together. $500,000 top. The 80% level then moves to 112K. So you'd roughly be break even, pretty close. If you sold now, it went to 500 and then dumped back down 80%. The 80% retracement, not 80% like straight move. Do you see what I'm saying? There's very, very few scenarios where buying Bitcoin at this level makes mathematical sense. What gets people to buy is the fear of missing out. And unfortunately, for those people, the fear of missing out is very strong because it's often people who are in desperate situations, not necessarily about to be homeless, but they just hate their jobs or they hate being like hand to mouth. And guys, I want to be very transparent with you because I think sometimes people get the idea that I don't understand what it's like because I've done well in life. Let me tell you something. I totally understand what it's like. Here's some quick 30-second background on me. When I was a kid, young, I grew up in trailers. My family finally was able to get a real house, right? And I say real house is in like a stick frame home, right? Not a trailer. We moved into a house in the 80s, and I spent most of my childhood in a house, which was cool. But my mom and dad divorced. My mom had all kinds of mental health issues. She was in and out of mental institutions, the whole 9 yards. And so when she wasn't living in mental institutions, she usually had like 1-bedroom apartments or trailers. And so when I spent time with her, it was always in lower income areas. Then, unfortunately, my dad passed away when I was a teenager. My mom wasn't stable enough to take care of me. And so I ended up on my own about 2 months after my 17th birthday. So I struggled, financially struggled, dropped out of high school. I was trying to help raise my 15-year-old brother. It was just, I say help because it was just me and him versus the world. Like we were living together, but he was like, pretty independent and stuff. And then I ended up in a situation through my own fault. Not a victim here. It's my own fault. I made some bad decisions. I had some bad priorities. And next thing you know, my utilities got shut off in the wintertime. And because of that, it was snowing outside. And because I threw bunches of parties at my house that I was living in, the windows had gotten busted out till it was very cold. And so the pipes froze. And the pipes froze, the pipes busted. Then I didn't have running water or heat, and it was cold outside. So then I was walking to a friend's house to take showers and stuff so that I could go get job interviews. I ran off and joined the military thinking that was the problem or was going to solve my problem. That didn't work out. I had some health issues. They sent me back home after a few months. Back to the same scenario. Ended up meeting my wife, blah, 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 working low-end jobs. And in early days in my marriage, my wife and me were actually on government assistance. Like we got food stamps. Like we got I don't know if it was on the cards yet or not. I think it was still on the cards. Like I think they were just doing the card thing, like the EBT cards. Like, so I've been on welfare. I came from the very, very bottom. Like there were times, I still remember times early on where like I would want a video game like really bad. I've always been a gamer, and like a game would come out. And I remember one time like standing at Walmart, staring at this game for like an hour while my wife was doing shopping, and she came back and she's like, just get it. You deserve it. Like you work hard and all this stuff. And I was like, it's $50. Like it's $49.95. Like I can't do it. And she's like, oh, just get it. And I will never forget this because I said, no, I'll wait for it to go on sale. And guys, I waited like 18 months to buy this game I wanted until it was on sale for $19.95 because $30 was that big of a deal to me. So where I'm at now is a result of decisions that I've made, but I came from very, very humble beginnings. You really want to follow the math because once I started doing that, my situation went from being, hey, I've got a few $1,000s I can spare to invest to, hey, I'm 43 years old, and if I choose to retire tomorrow, I can do that. And that's 100% from the markets. That's absolutely from following frameworks and not chasing assets. So this is an example on Bitcoin, okay? I'll show you an example on the QQQ. This is the broader like tech market. So this is the QQQ. It's also crazy, crazy high right now. It doesn't look quite as toppy as Bitcoin, but it is crazy high. But look at the bubbles. In fact, we're going to have to go to the NDX because the QQQ doesn't have enough history. So this is the NASDAQ, right? So it started back in the 1980s. And if we draw this was all one parabola, right? It broke. And where do you think it stopped at? Look at this, right back to that 80% zone, and even double tapped it in 2008. That quote unquote financial crisis was not actually a financial crisis in the stock market. What it was the disbelief phase of the market cycle. It just retested the 80% retracement level before skyrocketing. So again, if the top is in, which I'm not saying the top is in, really this parabola started back here and just went all the way up. So if we look at this, right now, the retracement is going to be down around 6,000 points, which is massive. And we're going to go to the QQQ because it's easier for people to think in dollar terms. So if I put this on there, the 80% level is right around $143 a share. And right now it's over $600 a share, which by the way, lines up very close to the last all-time high. But the same thing comes to play. Yeah, but James, what if the top is not in? It may not be. What if it goes to $1,000 freaking dollars, James? Well, I don't know, guys. Let's do the math. So let's say that it tops at $1,000. That changes our 80% fib level to $216. I don't know about you, but I'd still much rather buy right here than way up here. How high, this is where it gets crazy, how high would this parabola have to go before it broke and retraced 80% for that 80% level to be higher than the current price? This is going to probably change the way you look at markets.
Let's say that it went to $3,000, literally just went straight up to $3,000, no major crashes. Even then, the 80% retracement would be at $616 a share, whereas right now the price is $629 a share. So price would have to go all the way up here and then break 80% to get back roughly to where the market's at right now. Again, none of these things are guaranteed. It's not a guarantee that it will retrace 80%. It's just a guarantee that eventually market's correct. It just takes a long time. And a lot of people, especially younger people or people who got invested in the last, like COVID might really change things because a lot of people came into the markets during COVID who had never been in markets. And so they have less than 5 years of experience, and their only experience in the market has been basically straight up. And they had this one bear market that lasted about 10 months. And so this is what they kind of base things off of is, oh, a bear market looks like this. But this was not a macro bear market. This was a correction in a macro bull market. This is all one macro bull market. It's all one parabola. This is one correction. A true bear market resets the parabola. Okay, you'll get a massive crash. And the thing is in the stock market especially, people have been programmed. I have friends of mine that will argue till they're blue in the face about how this time is different because they've been investing all throughout this ride. Like I have one friend of mine that I've known for almost 30 years. Well, yeah, about 28 years, right? He basically tells me that it's not like it used to be. And like, he's like a hardcore, like never sell guy. And he basically thinks I'm an idiot. Maybe he's right. We'll find out. But when I asked him, well, when did you first start, cost averaging in? Well, he started cost averaging in 2011. So his experience has been limited to nothing but up, up, up. He's never lived through an 80% drawdown on his entire retirement account. Whereas I started in Bitcoin, so I did live through those cycles. I've been through multiple cycles, and I've unfortunately invested in enough altcoins that went down 99% and never came back, that I learned the hard way. Okay. Look at anything, and the opportunity is not in chasing the tops. The opportunity is in buying the lows. Let's look at Zcash, which is a perfect example. By the way, it occurred to me the other day, I don't think a lot of people who came in the market in the last 5 years realized this. Zcash was a fork of Bitcoin. Zcash is a Bitcoin fork. Just because it's not called Bitcoin Cash or Bitcoin Gold or anything else, it is a Bitcoin fork. It has the same 21 million supply. It's basically a privacy version of Bitcoin. And this was really, really popular back in 2016 and 2017. You can see in 2016, it actually peaked at almost $30,000 a coin. Now, I got involved in this when it was down around like, I think it was 100, 200 bucks, something like that, is when I started getting into Zcash, and I set up a whole farm to mine this stuff. But if you look at this thing, let's throw out that first candle because it's really wonky. It basically topped in 2017 around 900 bucks. And a lot of people wrote this thing off and just completely ignored it. But guys, let me put it on a log chart so it's easier to see what's going on. If you look at this, okay, I got to get rid of the Kraken. We'll go to Coinbase. That's that weird candle throws. No, shoot, there's not enough history. All right. If you look at this, this was this weird, I remember that when this happened, there was a flash crash in Kraken. It thought down to 10 bucks. From like 400 to 10 bucks. It was the craziest thing ever, right? But if you look at what happened, it put in this bottom in 2020, and all it did, look at this. It just kept retesting that level. And so if instead of chasing Bitcoin at its all-time highs, if you were watching this thing, you could have been buying this around 20 bucks or even as low as like 15 bucks. And it just pumped to over $400 in the last year. Literally off of its low, it pumped 2,700%. I'm not saying you go out and put your whole portfolio in one coin like this. I'm saying these are measured bets. The math is there. If you buy things that are undervalued, then the upside is massive. Let's say that I bought this here and it went to zero. Okay, I lose whatever I risk. Say I risked $1,000 for easy math. I'm out $1,000. But when it works, that's a $27,000 pump essentially, right? So you can be wrong many, many times. But if you're buying tops, the upside is super limited, guys. To get 27x on Bitcoin, it would have to go to like $2.8 million. More than that, in fact. Like roughly $3 million of Bitcoin to get the same return this gave. Somebody had commented on a previous video I did. that I was cherry picking NVIDIA, showing how NVIDIA outperformed Bitcoin. And it's like, oh, that's the only stock. It's not the only stock. There was a post that popped up on my Facebook a few days ago from 2021 where I showed the same thing with Tesla. Like in this specific post, I was showing how, during this time period, it was like a 2-year time period. If you'd invested in Bitcoin, you were up like 5x or 500%. But if you invested in Tesla, you were up 3,300%. It's not a once in a lifetime opportunity. If you invest in companies that are undervalued but still have strong fundamentals, the upside can be massive. And if we go back and look at Tesla real quick, which I have not done before this video, so I don't know what we're going to find out, but let's put on a regular chart. So this was Tesla, right? In 2019, I actually bought Tesla for the first time in August of 2019. So it had this little micro pullback to, it split. So it's saying $12. It wasn't really $12. I don't know if you guys know how stocks work, but when they split, the prices change. So actually it was like $200 and something back then, but in today's prices, it would be 11 something. So anyway, it popped, almost straight up, this massive, massive pump, 3,400%, and then it pulled back. But where did it pull back to? Just barely missed the 80% pullback and then rallied again. This is what you do, guys. This is how you make tons and tons of money in the market, is you use math. All right. Like this here is Amazon. And just so I can connect these points real easy, I'm putting a log chart for just a second. So this was Amazon. It really hasn't had a major pullback. It had this pullback here, but if we put this on a regular chart, that was only about a 50% pullback. It could be that this doesn't get an 80% because of the AI stuff, but I bet you at some point in the future, we'll be able to look back and be like, nope, that was just a correction, and an 80% happens at some point in the future. All right. But you go back in its early days, look at that. Look at that. It had pumped from 1997 to its high, it pumped 8,500%, 85x, right? In other words, a $1,000 investment was worth $86,000 at the top. But when it corrected not just to the 80%, even further than the 80%. If we look at NVIDIA, here's NVIDIA. This is back in 2002-ish. It pumped straight up, corrected past the 80%. Had another massive bubble. It pumped, corrected right past the 80%. This was in 2008. Then it had the pump that lasted for several years before the breakdown over the mining, right? I don't know if you guys know about this, but NVIDIA lost a bunch of market share because at one point its GPUs were heavily used in cryptocurrency mining, especially in things like Zcash. But then ASICs were invented for Zcash. And so they lost that market share and it caused it to dump. Didn't get to the 80%, so this could be a correction in hindsight, but it went past the 50% level. And then, obviously far past that afterward. If we look at this little pump here from 2018's low to the 2021 high, just shy of the 80% level. So will we get an 80% on this? Probably at some point. This is definitely a hockey stick pattern or a parabola. If you see check marks in markets, that's a big sign that there's trouble brewing, okay? And who knows where this thing tops at. If it tops right now, 80% levels of $51. And I'm saying 80%, 80%, 80%. I'm not saying you have to wait for 80% levels. I'm not telling you what to do with your money. Like there's lots of ways to approach it. The point is, in fact, I'll show you this real quick. I didn't know this was still on this chart. The point is to go for undervalued assets, not overvalued. So here's PayPal, which I bought around $60 if I recall right. And after it crashed, not before. Pump, 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 crash right past the 80% level. Okay. So look at this. Let's say that I'm buying on grids. Its all-time high was $310. Let's say that I buy some when it drops 50% and I put in $300. Let's say that I buy it if it drops another 50% and I put in $600. And of course it never hit these levels. So if I'd have just done this right here and bought on grids, then I'd have $900 invested at a cost average of $93 a share. That $93 a share right now, it's only $69. So that's not amazing. But $93 a share is a heck of a lot better than $300 a share. And if it continues dropping, then I can buy more, and my cost average will go down, down, down. And again, company could go bankrupt, I could lose everything. But statistically speaking, as long as it doesn't go bankrupt, and it has a pump in the future, then I set myself up to do well. So this video is now almost 40 minutes long, and it is getting late at night. So I'm going to wrap up there. I hope you got a ton of value out of this. I don't ever ask people to do this, but because this video is purely teaching, I would truly appreciate it if you shared this with at least one friend. I want to make a difference in people's lives, and especially if you know somebody who is young, because my circumstances meant that I went through most of my life, early life, especially financially illiterate. And I didn't actually buy my first stock until I was 35 years old. If I had gotten started much earlier, then I would have been in a lot better position. I did fine, but I will be in an even stronger position. For example, my brother had somebody who kind of took him under his wing when he was 20 and taught him about investing and stuff. And my brother tried to teach me, but I was like too arrogant to really listen. And my brother started investing like 50% of every paycheck. Well, that's why my brother is now a very wealthy individual who owns multiple new car dealerships, because he got wealthy through the markets, investing 50% of every paycheck, and then bought a dealership and then expanded and bought more dealerships, et cetera, et cetera. So I want to reach young people, especially because I want to show them that it doesn't matter where you start from. Everyone has an opportunity to become wealthy. And literally, it only takes a few $100s a month. So for example, my daughter is 19 years old and she automatically invests 20% of every single paycheck she gets. Every single paycheck, 20% gets invested. And if she sticks with that consistently throughout her life, she'll become a multi-millionaire. Even though she's going to college to be a school teacher, she will still become a multi-millionaire through her own investing. So do me a favor and do your friend a favor. Share this video, show them the math, show them that you don't have to be emotionally invested in the markets. You can just be strictly analytical, strictly logical, like a Warren Buffett, and still do extremely well for yourself. That being said, I am, of course, some guy sitting in a spare bedroom. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Be sure and give the video a thumbs up. Be sure and subscribe to the channel for more content like this. Again, be sure and share this video with a friend or with a Discord that you're in, as long as they allow that, or a Facebook group, or wherever you hang out at. As long as they allow you to share things, please share the video. Help get the word out there that this is a lot easier than people make it sound like. And most importantly, please remember to trade safe.